So I'd like to introduce the first two panelists. John Connors is a managing partner at Ignition. He's worked an odd job or two in our industry, including as CFO and CIO at Microsoft. He sits on the board of Nike and Splunk, in addition to Chef. And he's a graduate of the University of Montana. So John, yeah, thank you, please. Second, I'd like to introduce Bill Bryant. Bill's a partner at DFJ. He's an accomplished entrepreneur and investor. He's founded a number of important local companies, including QPass and Vizio. He was actually the first investor at Isilon. He's a University of Washington graduate with both an undergraduate degree and an MBA. And Bill, I just learned recently you're working on a PhD. So
I was.
Yeah. Bill.
Thank you.
All right, so let me start with, some say that traditional IT is collapsing. Do you guys agree or disagree? And to what degree are Seattle companies participating in that disruption? Go ahead, Bill.
I don't think it's collapsing. I think it's evolving. And most businesses don't buy technology because they want to buy technology. They buy technology because they want to do something. And what's clear is the level of evolution is probably unprecedented, at least in all the years that I've been in tech, starting in 1989 when I joined Microsoft. But it's highly analogous to the 90s. It's just that the industry is so much larger and the use of technology is much more pervasive. But there's no doubt that the data models being completely rethought. Everybody's rethinking what agile compute means. The endpoint world is now a cross-platform endpoint world with iOS, Android, and Windows all being important. And new forms of applications and how you get at information and what an application is are changing dramatically. So I would say businesses are evolving rapidly to adjust. They're buying technology for specific scenarios, and they're doing what great businesses do. They're figuring out how to either serve customers better or how to drive down costs. But at the end of the day, I think it's an evolution. It's a great time to be in Seattle because I think it's easy to make the case that the two most important companies in the future of enterprise computing are located in the Seattle metro area. I think AWS is the insurgent that is defining what the future looks like from a compute perspective, particularly if you look at infrastructure. And then Microsoft is without a doubt the single most important vendor to the majority of the companies around the world. And they're coming at it from a very, very strong position of account control plus application innovation. So we couldn't really be in a better city for where enterprises are looking for leadership.
Yeah, great. Bill, anything to add to that?
Well, before I comment, I really want to express my thanks for everyone here. I mean, I've been involved with the company as the first investor since February of 2012 when I met the founders, and it is so awesome to see the work that has led to this moment. Yeah, this is the fourth space for OpsCo Chef, and it's just so awesome, and it's just a test. We do the easy thing. We just, we write a check, and things just happen. And it's
which isn't as easy as it sounds.
Yeah. Sometimes.
I did get worried when I got here, and our plants are arriving because when you plants start to arrive at a company, you realize, holy crap, these guys are spending money.
You haven't seen the swimming pool downstairs.
I think the plants are rented.
Yeah. So Barry, I wouldn't use the word collapse. I would use transform. And in the same way that we've seen these paradigm shifts in computing from mainframe to mini to client server to PCs, now into the mobile and cloud era, IT is changing. And I remember back in one of my very first startups was a company called NetBot. We had a property called Metacrawler. It was a meta search engine. And at one point in time, it was we were processing about 10% of all internet search queries. And this was at a time when the search engines were Magellan and InfoSeek and Galaxy and Excite and Alta Vista, and we don't know any of those now. But we were running 10% of searches on like 3 boxes, right? Now imagine that. I mean, the scale that we do computing at today is so vast And the velocity that you spoke of is so incredibly fast. And you need tools like Chef to really compete in the new era. So transform.
Yeah, no, so why, from an investor standpoint, is the cloud so interesting? Bill, maybe start with you on this one.
Well, so as I said, I think we're in this paradigm shift to cloud and mobile-centric computing model, and in every one of those shifts, you've seen winners and losers. So very few companies are able to make those transitions. Maybe Microsoft will do it from PC to cloud, but that'll be a rare instance. And so in that context, that's what we look for as investors, the winners, obviously, of the new way that computing is going to happen.
I think there's several dimensions when you think about why cloud is interesting. It's not very interesting to a lot of incumbents that have their name on a box. It's bad. It's very good for companies, though, because for the end consumer, because you can do things so much faster at so much lower cost than you ever could before. And so, a good illustrative example is we were chatting with a guy a couple months ago, and he was describing, and he'd been in the industry a long time, and he was describing the application he was building, and he said in the mid-90s, this application would have cost, would have been a $40 or $50 million project. 10 years ago, it would have been a $5 million project, and now he can get something started and working and experiment for several $100,000. Now, it's not the same thing as the $50 million project, but the speed at which you can experiment, try things, scale things is just dramatically different. The second thing that is so different is the speed at which the consumer internet companies that really started this whole revolution, whether you look at Yahoo, eBay, Google, Amazon, Facebook, Apple, the speed at which they're introducing new services has completely shifted the mentality of what it means to deliver IT as a service or to deliver applications and services. So the cost model is dramatically different, and the speed is much faster. And that's what makes it really interesting, at least on two dimensions for me.
Yeah, great. To me, one of the things it seems we're talking about this very fast rate of innovation and the cycle we're going through as an industry. We're seeing at times some very tall valuations. I get asked a lot of times, are we in a bubble, or is this part of a real long-term cycle? And I'd be curious of your perspectives on that.
So there's no doubt that valuations have accelerated over the last several years, and it's a scary time to be an investor when you're coming into companies and betting that the future is the receptivity of public market investors and potential buyers is going to remain robust as it has been. But the businesses that we're investing in have real business models, and that's the contrast really to what happened 15 years ago, where there really wasn't an underlying premise, there wasn't a way for revenue to happen, there was no pathway to profitability, and companies like Chef have that in spades, and that's why they're being highly sought after. And I'm optimistic if there is a bubble, it'll last for another 3 years.
Yeah, and hopefully, we're one of the exceptions that when we do our next round, that it'll be at a high valuation and that investor will make a lot of money. But if you look, there's thousands of projects getting funded currently. But if you look back over time, there's usually only 20 or 30 projects per year that end up being meaningful. That is, they have outcomes over 500 million. And that's not to say that an outcome less than 500 million doesn't matter, but that's a good measure, is to say what projects in what year when they were started generated more than 500 million in an outcome. And there's usually not that many. And so if you look at the historical math and what valuations are at now, and particularly the size of rounds that some companies are raising, there's for sure going to be massive heartache and lots of broken hearts 2-3 years down the road, because there will be either some exogenous factor or some business cycle flip, and then those valuations will look completely different 2 years from now. But the 20 or 30 projects that are really good projects, they'll still be great companies and great outcomes. Maybe not what they would have been at the peak, but there will be some great outcomes in the next few years.
Yeah, great. And maybe just one last question that I'll tail off of that one, John. The conventional wisdom is that we're seeing more of those outcomes in the Bay Area versus Seattle. So let me do kind of a pit Bay Area versus Seattle here. What do we need to do in this area to drive more big, important companies in this industry?
Great question. And first of all, the Bay Area has had an early and large start and has some fantastic assets. Stanford University, a VC community that is deep and talented, and it has a very broad technology industry. If people aren't happy with the deal they're in, they go find a new deal. It creates a level of urgency that is almost maniacal to make progress with your company. The second thing, so the first thing I would say is you just have to have an extraordinary level of urgency if you want to build a winner. And it doesn't really matter whether it's in tech or anything else. You've got to have an incredible level of urgency. The second thing that is really important is you've got to be very good at storytelling and very good at thinking big. Yes. And the Valley companies and the Valley has a very rich history of dreaming big and telling great stories. And it doesn't matter what your product is. If it's going to be a big thing, you've got to dream big and you've got to tell a great story. The third thing that we've got to continue to work on is every coffee shop, every restaurant, every bar, no matter what it is, in the Valley, it's a very tech-centric industry. One of the things we're blessed with in Seattle is we have a very diversified economy with lots of different industries that are very healthy and good. So we're not nearly as tech-centric as the Bay Area, but the tech industry here has to continue to work the way the Bay Area does, where you're constantly keeping abreast of what are the new projects that are starting, what progress are they making, and then finally we just need to have more hits so there's more serial entrepreneurs, CEOs, sales leaders, biz dev leaders, marketing leaders. We've got a very deep pool of engineering talent, particularly with complicated platform-like products. We don't have the pool of serial CEOs, biz dev, sales, marketing, and that's probably the area that we've got to really work on. So if I was governor for a week, the first thing I would do is go to California and recruit a bunch of those companies to come here and remind them that we do not have a 13.3% income tax. It seems like a pretty easy sale.
I'm with you, John. Bill, anything you'd add on to that?
Well, there was actually a recent study that looked at the billion-dollar outcomes, and 36% of those are outside of the Bay Area, which you'd say, well, that's not all that many, but the Bay Area is 80+% of startups. So disproportionately, there are actually more larger companies outside of the Bay Area than within it. But I think Seattle, we're well positioned. We've got more software developers than the Bay Area does. I mean, it's crazy to think that, but between Microsoft, Amazon, Boeing, other large employers of software developers, we have more talent up here than anywhere else. So we need big, audacious, aspirational ideas to come forward. I just wish Seattle had a stronger kind of social piece. So if we'd had a LinkedIn up here, that would have, I think, done amazing things to us. We've got gaming, we've got Zulily kind of touching on the consumer side, but we could really benefit from a massive, the next person that WhatsApp, the next WhatsApp has to come out of here.
Yeah.
And what you can do is be the CEO that takes Chef to an incredible height, and just more winners and more patterns, and that's what we need. And if you think London wasn't a financial center that competed with New York City 25 years ago, they made a concerted effort, they got some things in, and now London is a very important financial center. Most cities, elite cities of the world, would do almost anything to trade places with this city and what it's got. And we're in a really good position. Things are much better than they were 10 years ago in tech. They'll be much better 10 years from now than they are today, but we just need more demonstrable examples of hits, and we need to get more of the Valley people up here, because once they come and understand what a great community this is and what a great place it is to raise a family, it's a really attractive place to be. And so it's hard to be anything other than bullish and long on Seattle.
Yeah, great. Totally agree. Thank you guys both. John,
Thank you.
yeah, really appreciate it. Yeah, Bill.